Thank you for joining us here. You're watching Business at 9 on ET Now, and I'm Nivedna Prabhu. Let's put our focus on our top story. The Union Finance Minister Nirmala Sitharaman today presented before the groups of ministers or GOMs from states a blueprint for wide-ranging reforms in the goods and services tax GST regime, including a rationalized two-rate structure, lower tax incidence on insurance, and simplified compliance norms. Now, addressing the three GOMs at the Vigyan Bhavan in the national capital, she said the proposed reforms are aimed at ushering the next generation of GST reforms to strengthen industry confidence, boost consumption, and make compliance easier for businesses. Now, the GOMs on compensation, Cess, health and life insurance, and rate rationalization are meeting over the 2 days, that is August 20th and 21st, to review the centre's proposals before sending their recommendations to the GST Council. The Council, in fact, headed by the Union Finance Minister, comprising state finance ministers, is expected to take up the matter in its meeting. Officials indicated that final approval is likely before Diwali.
अब लोगों ने सबकी इच्छा रही कि इसको पास किया जाए और गवर्नमेंट ऑफ इंडिया का प्रस्ताव स्पष्ट है कि सभी जो आदरणीय प्रधानमंत्री जी ने लाल किले से कहा है कि इंश्योरेंस के सेक्टर में इंडिविजुअल या उनके परिवार के इंश्योरेंस को, हेल्थ इंश्योरेंस को फ्री एक तरह से जीएसटी से मुक्त किया जाए, तो उस पर चर्चा हुई है सबका और इसका रिपोर्ट लेकर अब जीएसटी काउंसिल को मैं
wanted that insurance GSTs to be brought it down to the zero. But at the same time, we made it very clear the premium benefits, whatever you are reducing that GST, it has to go to the people, to the policy holders, not to the companies. This is what some mechanism you have to evolve to see to that this whatever we are trying to do should go to the people. See, the revenue loss that, they are expecting somewhere some 9,700 crores. Overall. But overall.
Let's also tell you, after we heard those two voices, that Punjab Finance Minister Harpal Singh Cheema said that Punjab has been incurring a loss due to GST and advocated for structural reforms in GST. What's his viewpoint? Let's listen in.
वही व्यू पॉइंट रखा है कि राज्यों का, जो पंजाब की एग्जांपल दे दूं मैं, तो पंजाब का 21,000 CR पर ईयर लॉस हो रहा है जीएसटी आने के बाद, जीएसटी रिजीम लागू होने के बाद। जब तक कंपनसेशन सेस मिलता रहा ठीक रहा, उसमें कोई आपत्ति नहीं। जब कंपनसेशन सेस खत्म हो गया तो अब पर ईयर 21,000 CR का पर ईयर हमें रेवेन्यू लॉस है स्टेट को। और जबकि हमारी कंप्लायंस, जो टैक्स कंप्लायंस है, जो जीएसटी की कंप्लायंस है, वो देश के पहले 3 राज्यों में हम आते हैं। कंप्लायंस हमारी सबसे ज्यादा है, रेवेन्यू हमारा कम है। इसका मतलब कहीं ना कहीं इसमें स्ट्रक्चरल चेंज की जरूरत है।
All right, we heard those voices, but to understand how he's also essentially looking at this particular aspect, and we take that opportunity to be introducing my guest this evening. Joining me on the show today is Mahesh Jaisingh, a partner and leader in Direct Tax, Deloitte India. Mahesh, thank you very much for taking the time out, joining us this evening here on ET Now, in fact, on Business at 9. Let's begin with the aspect as to essentially how are you looking at this, right? Let's begin with how, from a tax policy standpoint, how significant a departure is this, and does that signal a fundamental shift in how we define essential services under GST? Given your expertise, do you see a precedent being set here, where perhaps social protection instruments may be increasingly ring-fenced from indirect taxation, Mahesh?
Absolutely, and thank you for having me over. I think it's a historical moment in terms of where we are on the GST journey. The first 8 years has been settling down, a transition on the technology front and the compliance front. All of that has been now at a well-settled place. The constant feedback from industry, including a survey that we ran, is its time is ripe to have more rate rationalization and therefore have lesser slabs, which results in lesser litigation. We'll come to insurance and socio-economic related supplies, which have a nuance that I'm keen to share today. But I think one of the things is that by virtue of removing the 12% rate and having only a 5 and 18 and whatever would be the third category, the special rate, you're eliminating a lot of the litigation that otherwise was traditionally taking place on an interpretation of whether a product is 5 or it's 12 or it's 12 or 18. So by sheer new design, so to speak, the level of litigation should significantly drop on classification matters. From a consumer standpoint, what better expectation can we have for this Diwali? That a lot of the products that we buy, whether was at 12, a lot of them are expected to move to 5, and was at 28, expected to move to 18. And even the ones that are at 28 plus a cess, while it's a little speculative, one can expect that the net tax collection on each product should drop and the consumer should get a benefit. The third point I wanted to share, and I'll pause here, is that it's important to have exemptions in some cases that are very important from a socio-economic standpoint. But from a pure GST framework, an exemption is sometimes not the best, because that from a business standpoint, they'll end up losing an input credit. So therefore, the cost of the product may be impacted a bit. So I just wanted to highlight a small caveat on exemptions from a business lens. While a consumer, I'll be happy to see my rate of tax move from, say, 18 to 0 or 12 to 0 or even 5 to 0. But from an economic standpoint, that's a part which I'm still keen to look at the fine print and the actual implications.
Absolutely. And in fact, like you put that into perspective from all angles as well, most importantly, the consumer aspect. But what we're also looking at right now, Mahesh, is how there are differing views, right? Let me just touch upon what the Punjab Finance Minister Harpal Singh Cheema also said, that Punjab has been incurring a loss due to GST and has advocated for structural reforms. There are other viewpoints as well, which I will essentially get into. But how are you looking at this particular aspect?
No, I respect the Honorable Minister's view. I think, having said that, it's important to understand that it's a legal framework and a constitutional framework that was agreed upon 8 years ago. So you effectively move to a destination-based consumption tax principle rather than a tax to the origin state. Perhaps in the state of Punjab, prior to GST, the tax collections were slightly higher, given that the manufacturing activity was higher than the actual consumption taking place in that state, and that state was making supplies across the country. And therefore, to put his point of view in perspective, it's the legal framework of a consumption-based tax that is now, in a way, playing out on the numbers, and that's where he's called out a net dip in tax revenue vis-a-vis the pre-GST regime. To me, I can't think of a quick fix solution, because the structural model of having this tax being a consumption tax is the pure way of how VAT is taxed globally. And India now, after the rate rationalization, will also get closer to global best practices on the rates. But a state-based system of taxation does have some of these challenges, given that some states will be heavy on supply and some on consumption. But I, for one, think as the consumption keeps expanding in each state, the tax collection should continuously increase across each state.
Talking about states and the purview, Mahesh, what we do see playing out is that there are other differing opinions as well, especially when ministers like Gajendra Singh Shekhawat argue that states risk losing vital revenue, while what we see Bihar Deputy CM Samrat Choudhary pushes that the line that affordability is non-negotiable. So how do you see that interplay between, let's say, health policy and tax policy as well?
I think it's a balancing act that I can't, give a final verdict on. Yes, each state does heavily rely on GST as an important element of their state revenues, because other than that, you have taxes on oil and gas and land and electricity. So there are a few other products which are outside the net, but a lion's share of the state transaction tax revenue comes from GST. Obviously, we don't know the final fine print of which products go where. But, even if you see some of the cess today if the 28% rate moves hypothetically to, say, 40, the states will end up getting some more additional share of the earlier tax being 14 for them, half for them and half for the center. That moves up to 20. So I, for one, think there's a lot of hard work being done by the group of ministers themselves, as well as a lot of the senior officers across the states and the center. And I'm sure they'll find a sweet spot where I hope that none of the states are significantly impacted. It could be a near-term dip, but in the medium to long term, particularly in the backdrop that you may have noticed that, and your channels reported it on a consistent basis, that on a month-on-month basis, there has been increase in taxes, tax collections on a year-on-year basis, or when you compare this month to the previous year's month. So I, for one, am of that school of thought that if not now, then when you have a reasonable momentum going, and as the Honorable Prime Minister has called out that this seems to be clearly a driven, it's highly driven based on being a consumer-friendly change for more affordability and lesser taxes from a consumer standpoint. I think the state impact, when there's a constant growth in the economy, which we have been seeing, and the collections going up with better tax compliances and automation, I think in the medium to long term, most states who may have even some level of a small dip will be able to catch up, if not beat their original estimates.
Talking about that aspect as to how states are also essentially viewing this, while you put that into purview, I want to raise the point about how states like Rajasthan have expressed fears of revenue loss, especially amid existing duties being reduced elsewhere. For example, let's talk about solar. So in that purview, Mahesh, should the centre build a compensation framework to maintain consensus in the council? Do you think a phased approach, perhaps exempting only pure protection products initially, would strike a better balance, perhaps, given this seems like a centred and states loggerhead sort of a situation, if that's where this is headed?
I don't think it should be a loggerhead situation, according to me. I think each state also would like to have the benefit get passed on to the consumer. And yes, it's a balancing act of getting the revenue to be able to run the states. I get that. In terms of it, whether it should be staggered or not, I'll give you first a point of view as a tax guy and what is the best practice globally and how we should ideally be in a regime. I would say it should go all in one go. It makes it simple. It makes it clear. Second, a particular state, whichever it is, has a concern on a product, traditionally would be because they have a lot of manufacturing of that product in that state. But the beauty of GST is actually the GST tax applies on the consumption of a product in your state. So I'm sure each state recognizes this comment I made, and it's not that somebody's lost sight of it. But I, for one, think that going back and revisiting a constitutional 5-year compensation cess framework, which on account of COVID, there was a little bit of a delay, a staggering over that to compensate. I think that was a constitutional framework signed and sealed and agreed. I would say that re-bringing in a compensation cess is not necessarily the best from a pure tax law framework, wearing my tax hat for many years that I've been doing this.
Fair enough. But given how Punjab also has said, the finance minister, in fact, going back to that point about 21 crore loss annually, right? 21,000 crore loss. But there's no alternative to compensate these states as well. Are we looking at loopholes or perhaps challenges, if not loopholes?
I would say this loss, in my assessment, I'm not fully privy to, other than the brief comment by the Honourable Minister. I think he's talking about this slightly agnostic to the proposed rate change. And as I read into the reasoning as to why this loss is happening in the estimate, which I'm sure the math has been done, it is a framework-related estimate rather than a rate-related estimate that over a period of time, given that it's a very good manufacturing state, it has a lot of manufacturing and therefore supplies from that state, perhaps that is playing out in those numbers. And therefore, to me, I would think the GOM as well as the government holistically from the central government and states will certainly like to know what is an impact of a revision and to keep that at best a moderate or what could be, in a way accommodated in the near term for medium to long term good. But in terms of a framework to revise that, I don't think the GST law should go down that path, is my hope as a consumer as well as a tax advisor and a practitioner.
Talking about the consumer purview as well, when we're looking at how there's been a lot of chatter in terms of health and life insurance, these are financial instruments, Mahesh, and a lot of people are of the opinion that taxing these two in itself was never a good idea. In fact, it has become a hindrance for general public. At least that's the purview. It's become a burden. But people are, of course, sensitive to taxation as well. And any relief is good relief, especially for the general public. There's also opinion that it was a necessity and a positive step for the growth of the industry. But if that GST is removed, how much of a reduction in premium would an average family really feel? And will that be enough to change consumer behavior on a larger scale?
So clearly we are an underinsured country. There's so much scope for all of us to be, as a country, to be insured more. I do think this particular proposed change will be a shot in the arm from a consumer standpoint, and more acceptance of taking insurance products, which is extremely important. Regardless of an income strata, it's very, very critical, and it's a fundamental instrument, like you also called out, that individuals should ideally take. Currently, when you look at a particular rate of tax at 18% or so, you feel, oh, there's a significant tax in it. And therefore, I, for one, am fully excited about any reduction that gets announced. I did at the beginning of this conversation highlight that it's not that an insurance company, take a life insurance company, has no input services, and just understand the way the VAT systems work in India and worldwide. So whether it is the reinsurance service that they get, the co-insurance, or the commission agents who charge the insurance company, if the framework is going to be that you reduce the tax to, say, zero or exempt on the output, but there's that input tax that comes in for these insurance companies, the insurance companies will not necessarily have a full reduction to the 0%. There'll be a small impact onto the pricing. So I would say I will tread with caution on, if, let's say, an exemption comes in, it's very difficult to say how much an 18% service, which is down to an exempt, will the price go down by 18%? On paper, yes. I can certainly give with authority saying if an 18% product goes down to 5, or to, or 12% going down to 5, yes. If you're paying, say, 11,200 rupees on a service that is 12%, if it's down to 5, you will pay 10,500. So you will have that reduction, no doubts about that. And ditto, an 18% product, which was at 11,800 on a base of 10,000 in my example, will drop to 10,500. So I don't have a doubt on that. I do want to highlight a little bit that, and I don't want to make it too technical, but the moment you bring in an exemption angle, then it's not as simple as the math saying 11,800 dropping to 10,000, because there are certain expenses which these companies will start not being able to claim the credit, and that will get into a cost pool for that company, which they perhaps will be compelled to pass on to their customer.
And essentially, we'll have to see how that pans out once this does come into effect, and whenever we do see that happen, Mahesh. But thank you very much for not only taking the time out and joining us this evening, but also sharing with us your perspective as to how you're essentially looking at it on all angles, including how the state versus centre is panning out, and from the consumer standpoint. Appreciate you once again for joining us on Business at 9 this evening. But for the moment, we leave the conversation.